Do you ever wonder how real estate investors can find these incredible deals and then make big returns on the sale of the asset? Well, if you're familiar with real estate investing, you know that this is the value add strategy. I'm Susan Elliott with Flow State Investing, and in this video, I'm going to teach you the 3 keys to the value add strategy in real estate. But wait, I'm not going to talk about fix and flips or multifamily investing. I'm going to show you how these 3 keys apply to note investing. As always, stick with me around to the end to catch your moment of flow. If you're new here, don't forget to hit that like button and subscribe so that you can see more of this content and help others to discover it as well. Ready? Let's jump in. Value add real estate investing is when you find an asset, typically a house or a property, that needs some improvements. With these improvements, the value of the house will increase. You know that paying a contractor to go in and rehab the kitchen or paint the walls, for example, will allow you to get a much higher rent or even bigger sales price. This is the value add strategy in real estate in a nutshell. The 3 keys to this strategy are: 1, you have to have the knowledge to identify assets that have the potential to increase in value, but aren't worthless. Think minor rehab versus full teardown. Number 2, you purchase the asset below market value. And number 3, you have full knowledge of how to improve that asset. Real estate investors often love these kinds of assets or properties because the numbers can work out such that a small improvement will yield a big return. So let's take this concept into note investing. When you invest in a note, you become the lender or the bank, and the owner of the property pays you every month. Your investment consists of the loan documents and the mortgage or deed of trust, which secures the physical property to those loan documents. That's the note. In a previous video, I've covered a lot about why this is one of the purest forms of passive monthly cash flow, because you are working with owners and not tenants. I'll link to that in the description below. The value add strategy in note investing involves finding non-performing notes that need a little bit of work. You or your partners put in the work to essentially force appreciation and create a performing note. Then you sell the performing note for a higher yield. It's like the fix and flip of the note world. Let's dive deeper with an example and go back to those 3 concepts to the value add strategy. Let's say you purchase a non-performing note for $50,000, which includes expenses for note analysis, monthly servicing, and a reserve fund in case of foreclosure. You do your research and see that the property is worth $80,000 as is. You also see in your extensive due diligence process that the owners likely want to keep their home, even though they haven't been able to make payments recently. That's why it's a non-performing note. They're not actually paying on it currently. Okay. Let's look at those 3 keys now. Our first key is that you have to have the knowledge to identify an asset, a note in this case, that has the potential to increase in value. You found a $50,000 note that is secured by a house that's worth $80,000 as is. You've also determined that the borrower may want to work out a new payment plan to keep their home. You also have the knowledge to assess the quality of the paper trail in the loan documents. You can see that there's no missing recordings or crazy liens out there that would impact your expenses. Assessing the property, the people, and the paper in your due diligence means that you have the knowledge to identify a value add note asset. I have a big video on our due diligence process, so that's in the link in the description below. The second key is that you purchase the asset below market value. You and your team are able to do this because of your relationship with the seller and your negotiation skills. While our example note cost $50,000, the actual balance due from the borrower is $90,000. With a property that's worth $80,000, the borrower is underwater, but we aren't. Because you know the actual value of the securing collateral or the home that the borrower isn't making payments, you aren't going to pay full market value, or $90,000 in this case. You leverage your knowledge and have built strong relationships with the seller and can purchase the note for only $50,000. That's 55 cents on the dollar. We call that an equity cushion. We have incredible flexibility to add value and the security of knowing we can still get a great return if we have to take back the property and sell it as is. The third and final key is that you have the knowledge, skills, or funds to actually put in the work to improve the property. For our note example, you know the details to find in the stacks of paperwork that come with the owner encumbrances report. You know how to evaluate the fair market value of the property. You know what to look for in the borrower's credit report or servicer comments. Or you have a partner who knows how to do this. In fact, this is how most people invest in the value add strategy of notes. The due diligence here is incredibly detailed, and you can make some pretty serious mistakes if you don't know what you're doing. It's a win-win relationship. Operators like us at Flow State Investing can access steeper discounts when working with partners. Therefore, you get to take advantage of the great returns possible in this value add strategy class. Okay, to sum it all up, these are the 3 keys to the real estate investing value add strategy that you need to have. 1, have the knowledge to identify assets that have the potential to increase in value. 2, have the relationship or negotiating skills to purchase the asset below market value. Finally, 3, have the knowledge, skills, or funds to improve the asset or property. There you go. If you're interested in accessing the value add strategy in note investing, join our Flow State Investing Circle. The link is in the description below. It's free to join, and it'll get you access to more education and information about growing money through notes. We'll schedule a call to discuss your investing goals and whether a note partnership might be a right fit for you. Finally, please like this video and subscribe to our channel if it has provided you any value. And please share it with someone who you know might want to stop trading their time for money. I'm Susan Elliott with Flow State Investing, and here is your moment of flow. I'll see you next time.
It's ready for you. It's ready for you to eat. Ready for you to eat. I made a sand cake.
Sand cake.
Sand cake.